Good afternoon, everyone. My name is Matt Gordillo, and I'm one of the partner and financial advisors with Park Edge Advisors. And welcome to our monthly market insights, joined by Gavin Gowecki, our portfolio manager, and Rich Lowry, partner and chief investment officer. Hi, guys.
Hey, Matt.
How you doing, Matt?
Good, good. Just a moment for our sponsors here. Very good. Thank you for that. Well, guys, here we are. Summer is here, and we had lots going on. We had an inflation read out this morning, and some exciting stuff in the marketplace happening. But Gavin, I've got this fresh market insights piece that came out last week that was distributed to clients. Maybe you can bring us up to speed where we are from last month.
Sure. Really, the main message from May into June is that we've been in a constructive risk-on environment. Quad 2 reflation, which is a risk-on regime, is still the leading market macro regime. So we're constructive. But what has actually changed is an observation underneath that Quad 2. We in May saw the Quad 1 was kind of in second place, which is also a risk-on environment. So that kind of really made the conviction a bit more, okay, this is really a risk-on environment. What we've seen into June is still constructive, but Quad 3, to your point on the inflation reading today, Quad 3 has taken second place. And so what that does essentially, when we look across all the signals that we have and look at every day, it's just taken some of those signals and made it a little bit less clear, a little bit less conviction. So I think we would want the message to be still constructive, but noticing that change. And then from here, specifically for this setup, looking at three things: credit spreads, bond volatility, which has to do with credit spreads, and currency volatility. Those three things would be really good signposts for us to watch to see if that the signaling behind that Quad 3 transition strengthens from here. And if it did, then we would take one more step probably towards being a little bit more cautious.
Very good. Well, I like to hear risk on. Rich,
yeah,
could you explain the difference between Quad 2 and Quad 3, and if you had anything you want to elaborate more on Gavin's comments?
Yeah, both feature inflation accelerating, and the difference between 2 and 3 is that in 2, growth is also accelerating, so that makes it risk on. In Quad 3, growth slows, and that makes it risk off. Recent examples: 2021, inflation ripped higher, but it was a risk-on environment because growth was accelerating. It was Quad 2 all year. 2022, we all know, was a lousy year in the market. Inflation was still accelerating. The main difference was growth was slowing, and that is what made it risk off. So, the market signals that Gavin is referring to, we're looking at market behavior across global equities, volatility, commodities, foreign currencies, credit spreads, global bond yields, etc. And each day characterizing the behavior we see across all those different markets, all those different assets all over the globe. Are they exhibiting behavior that's most consistent with Quad 2 or Quad 3? And as each one of those individual markets changes, our assessment of the dominant regime changes. And what we've seen is pretty wide agreement across every one of those categories behaving like Quad 2. Now we're starting to see incremental change, primarily in currencies, that indicate a phase transition. So the score for Quad 2 has been losing score. The score for Quad 3 has been gaining. It basically means to us we need to keep an eye out. Now, in the market insights piece that you just held up, there's a section on the far right column that says 1 to 3 month outlook. And, there we drill down on various factors that often lead inflections in growth and inflation. And we're still getting positive readings on those. We've seen, some of the variables kind of downshift from a strong positive impulse to a weak positive impulse, but nonetheless, it's still a positive impulse. So, the typical sequence, it's not always going to happen this way, but the way the different systems are designed to work together is we would see deteriorating that 1 to 3 month outlook first, which would say be on the lookout for regime change. And then it's a matter of observing these day to day to see, when do we start to pick up more consistent quad 3 behavior? And that would be our signal to say, take risk down. It's not fair to say every time with a quad 3 or quad 4, something big and bad happens, but the reverse is true. Anytime there's been a big bad market event, it always has left footprints in quad 3 and 4, which is why we want to treat any move into those quadrants, with a fair bit of caution.
Well, I like what I hear. It sounds like we're generally positive, but maybe the caution signal is kind of getting a little stronger. And I also like that, I think with clients, a lot of times in the news or the newspaper or the media, you might hear one signal or one indicator that might raise a tentacle of caution or something like that, or it could be even bullish. And the fact that you guys are looking at multiple signals to really develop what quad we're in, I think that's comforting to know, hey, it's not just one headline inflation or something that moves the market for the day. You guys are taking it in totality, and I think that's reassuring. So I'm glad you refreshed on that.
Yeah, and I would add too that there's no prediction involved, there's
Right.
no forecast involved, there's no Gavin and I meeting saying, hey, what do you think? Here's what I think, where you come up with some view. As soon as you do that, natural human biases kick in. Where you tend to only see the things that confirm, your view, confirmation bias. Instead, this is market behavior. And the reason we track all these other markets is that they have a tighter connection to the real economy than the stock market does. They're more sensitive to inflections in growth and inflation than the stock market is. The stock market is dominated by passive flows that begin as a payroll deduction, go into a 401k, get invested the same way. Nowhere in that chain is anybody saying, hey, are things different this month? Do we need to adjust things? So if we could observe what's going on in these other markets, see them react first, we certainly hope that gives us a lead in making adjustments on risk before the rest of the stock market, is impacted by it.
Yeah, I like the way you phrase that. So we don't have a narrative that we're out there peddling, so to speak. We're just dealing with market behaviors and fundamentals and making good decisions around that. But having said that, there is some very exciting news that's been building up that is going to be coming out Friday, June 12th. We have a major IPO that certainly, is getting a lot of interest, and some clients have been asking about it. So I thought we could use this opportunity for our viewers and clients to hear our position on this. So maybe Gavin, you want to refresh us on for those people that don't know what the IPO this Friday is going to be, and maybe let us know kind of how we're looking at it.
Sure. I'm assuming you're talking about SpaceX.
Here you go.
Yeah, it's in the headlines just a little bit. And look, SpaceX is an exciting company. So people should be excited about that company. I mean, they're trying to do incredible things, and I think we've done work on it to understand what's going on, as we do with any big company in S&P 500. And by the way, it's not in the S&P 500 yet. Okay, and what we've heard so far is they're not going to waive the criteria for them to get included right away. They'll have to go through kind of the process. But this company is being said to have a valuation of like 1.7 trillion, 1.8 trillion. If it were in the S&P 500, that would put it up in the top 10 companies in the S&P 500 right away. Okay, so that's a very big number. So there's exciting things about what the company does. They have Starlink, they have all these different, obviously, spaceships and everything. Now, I think the point we would make is that the company can be great. That doesn't mean the stock is going to be a great investment right away. And we're open to it being a great investment someday. Maybe it will be. But what most people I don't think are realizing that are just looking at it, from their vantage point at home, is that its valuation is 1.8 trillion. And a lot of people are comparing it to Tesla, right? Because it's an Elon Musk company. Now, if you look back when Tesla IPO'd in 2010, the valuation, the market cap was 1.8 billion. Okay, and so now we're talking about 1.8 trillion. And so that's where they're buying in, the people getting these shares at that very high level. It's much different than buying Tesla at $1.8 billion. And so I think there's a little confusion there with some people, and maybe a bit too much excitement in trying to get those shares. That would be our view, is a wait and see approach. Let the earnings come out for a few quarters. Let's see what the company looks like, and kind of take it from there. And we have a process to do that. Not just look at the earnings and see what we think. We have a process like we were just talking about for macro for all those companies. So we're interested to see how they do, and wish everyone the best with it. But for us, it's a wait and see, and see what the first year brings.
Yeah, that certainly seems prudent. Rich, what do you think?
Well, I might be a little bit cynical on it in that, why are insiders selling? Normally, when you see a wave of insiders selling any company, any stock, you wonder, okay, what do they know that we don't know? Why are they selling? I don't know exactly who to attribute this to, but there was a comedian years ago that said, I don't want to be a member of any country club that will have me. And along those same lines, I don't know that I would want to buy any IPO where I could actually get shares.
Right.
If it's that good of an IPO, the institutions are going to gobble it up. And, if you're an individual investor, you're not going to be able to get any shares. The more shares you're able to get, that is a bit of a signal. Why are you able to get the shares? Why are the institutions passing on it? And, for that reason alone, I think I would agree with Gavin, is that, we'll wait and see. The odds of something running right out of the gate and never looking back kind of flies in the face of the history of IPOs. Bloomberg did a piece recently where they looked at like the 20 largest tech IPOs, and there are a couple that were up in the first month and also up in the first year, but those were more the outliers. So there tends to be opportunities along the way, and keep in mind the way they tried to orchestrate this whole thing is they would sell an initial float that's only 4% of the company and lobby S&P to get it included in the index, so all the passive index funds had to buy it, to kind of structurally create inelastic demand for the shares. That doesn't look like it's going to happen, but the more the stock does move up, the more it opens up more shares to be unlocked where insiders can sell. So, the prudent thing to do is to let it play out. Let's see, are they able to improve their cash burn rate? Are they able to generate profits that, are worthwhile, that back up some of the great potential that the underlying businesses have? But, our view is there's time to let this play out. Where you're making more of an investment decision than, buying at the IPO, I think is more of a speculation.
Yeah, I think that's great. And certainly Friday is going to be an exciting day in the markets and in the news. But for our compliance partners, this is not any specific advice or recommendation regarding SpaceX. Of course, if you're listening to your client and you want to know how it pertains to your situation, meet with us offline and we'll give you the our fiduciary advice. But this is just for conversation only. So,
Matt, I
I'm
think
glad
I
you
would,
added that.
yeah, that is good to add. Matt, I would just say to set the expectations with everyone, I think a very realistic potential on Friday is that it does run right out of the gate, right? They're going to offer 75 billion. But to Rich's point on the cash burn, they I think they need like 300 billion, right? So let's say it does. Now, earlier this week, it was 2 times oversubscribed. Now the headline today on Bloomberg is 4 times oversubscribed. Everyone wants it. So it could open and it could double, triple. But then what are they going to do? They're going to offer more stock because they need more money. They need money. The cash burn, everyone knows how much cash they're burning. So then the stock price could come back down under deal price. I mean, that's very realistic. So
sure.
I guess what that sounds like for people at home is a lot of volatility, okay, is what I would expect. So it could be very exciting, but it is best to wait and see. So I think why don't we do an update, Rich, next for
Perfect.
July and say how did that go? What was the volatility like? And we'll see how it pans out.
Sounds good.
I think that's a great idea and a great place for us to stop this month. And now we got something to look forward to next month. Meanwhile, thank you, gentlemen. As always, appreciate your feedback and insight. And we'll talk to everyone next month.
All right. See you, Matt. Take care, everyone.
Take care.